Some of what's being shared online about the Department for Work and Pensions, or DWP, having access to bank accounts is misleading. I'm going to explain what is changing, what is not changing, who this applies to, and what it means from a privacy and online security point of view. For clarity, I'm talking about current systems, not legacy benefits. What has changed is how government departments can request financial information, not a move to wider surveillance or monitoring. So in 2023, legislation was passed that allows the DWP to require limited information from banks in specific situations. These powers relate to fraud and error checks, and what's happening now is the practical rollout of those powers, which is why this is being talked about more widely online. From a privacy perspective, it's important to be clear about what this does and does not mean. The DWP does not have access to bank accounts. They cannot see transactions in real time. They cannot monitor spending day to day. There is no system that allows them to log into somebody's bank account. There is no online financial surveillance. What exists is a legal power to request specific information, and only in situations where existing rules already require financial checks. Where this applies depends entirely on the type of benefit, which is where a lot of online miscommunication causes confusion. Some benefits are means tested, meaning that entitlement depends on income or capital. Current means tested benefits include universal credit, housing benefit, pension credit, and council tax reduction. For those benefits, financial information may be requested to confirm eligibility, check accuracy, or investigate suspected fraud. These checks are targeted and specific. They're not automatic, they're not continuous, they're not applied to everyone. Other benefits work differently. Contribution-based benefits such as New Style Employment Support Allowance and New Style Job Seekers Allowance are based on national insurance contributions, not savings. Bank balances are not part of eligibility. Disability benefits, including Personal Independence Payment, PIP or PIP, DLA, Disability Living Allowance, and Attendance Allowance are based on medical evidence and functional impact, not on income or capital. Financial checks are not required for entitlement. Child benefit sits slightly differently. Child benefit itself is not means tested and does not assess savings or bank balances. There is an income-based tax charge for higher earners, but that's handled through the tax system, not DWP benefits monitoring, and it does not involve access to bank accounts. So from a privacy and security angle, the key point is this. Financial data access is limited, purpose-specific and rule-based, not open-ended. What has not changed is eligibility rules. What has not changed is how benefits are assessed. What has not changed is the financial checks only where the rules already require them. One genuine risk that has increased because of this discussion is scams. Whatever stories about data access circulate, scammers take advantage of the uncertainty. The DWP will not ask for bank login details. They will not request payment by text. They will not contact people through social media demanding urgent action. Any message that creates pressure, urgency, or fear should be treated with caution. That applies well beyond benefits. It's general online safety rule, to be honest. The most accurate way to understand how this affects you is to identify which system you're dealing with and what rules apply to you, rather than reacting to headlines. Clear information reduces risk. If this has been helpful, you can subscribe for more calm explanations about privacy, online safety, and how digital systems actually work.